Today, I would like to cover home builder stocks. For the last couple of weeks, my portfolio has been on rampage with these home builder stocks. Let us see what's happening in the home builder boom.
The home builder part? Is it, you think, an urban exodus?
It's a good question. I think that the trend it really was in place before COVID. And if you think about sort of the demographic wave that's coming through the pipe right now, there's about 26 million millennials of prime home buying age today. That's going to accelerate to about 29 million in 2025. And at that point, it's going to that group will be about 3 million greater than the baby boomers at their peak in '87. So it's a very, very strong wave of demographic support that's coming through the pipe. That in itself, I think, is kind of leading the charge. Put on top.
Okay, so the summary is COVID, combination of COVID, very low interest rates, and the millennials causing the home builder boom. Even though rest of the real estate market rates are down for the last 6 months, home construction has been on tear for last couple of quarters. So last quarter, these companies did a lot, really nice, and this quarter they have announced very good results, including the big home builders, DR Horton, Pulte, and also Meritage Homes. My favorite home builder, let us see. So in this portfolio, I covered my favorite home builders, and then if you don't want to buy individual stock, this is an ETF. This is one of the best ETF for home construction. And this ETF, the problem with this ETF is, as you can see here, it still did 128% up above the 52-week low, so which is pretty good return. But if you look at my favorite home builder is Meritage Homes Corporation. So their 52-week range is between $25 and $100. They are 2% away from the peak, and they announced last quarter results last week, and from then the stock went up by 10 points. The next, my favorite is DR Horton. This is one of the best rated home builder. I will show you in a minute, and also both Lowe's and Home Depot stocks on tear. So this quarter, next couple of quarters, the home builder stocks are going to do really good because of low interest rates and the millennials, lot of millennials buying new homes. And another one I want to cover is Invitation Homes, which is different compared to the traditional home builders. But what they do is they own secondary home market, so they have millions of homes or hundred thousands of homes they own and they rent it out and they maintain. So basically, it's a rental home market. Let's go to Meritage Homes first. So as you can see here, this is a 10-day chart for Meritage Homes. So it was $75, now $100, close to $99. So I bought it around $40 a few months back, and then for last 6 months, even though it went down to $30, it has been going, as you can see here, 40, 50, 60, $100. This is not a huge builder like other builders. This is a small time builder, still undervalued, and then I like the PE, and what I like is the momentum of this stock. It doesn't mean that I'm recommending to buy, but this has been, I have been owning this since it was $40. So take a stab at it. And then if you look at the last quarter results, um, Meritage Homes reported earnings of $2.38 per share, and the estimate was $1.52. So it's 56% whopping and 82% year over year. So they're minting money like anything. And the total revenue is about $1.04 billion, which is close to 20% above last year. Okay. So let's look at the DR Horton results. So they just announced results today. DR Horton reported quarterly results of $1.72 per share, which surpassed estimates of $1.27. which is 35% above the estimate, and their total revenue is $5 billion. Okay, so let us compare these stocks and why Meritage Homes is my favorite. So this is TD Ameritrade comparison of Meritage Homes with peers including Pulte, Toll Brothers, KB Homes, LGI Homes. So the 52-week change has been 51%, and then rest of the home builders has been LGI Home 61%, and is going the rest. Market cap for Meritage Homes is one of the smallest one, $3.7 billion, and the total revenue is $4 billion, and you can see the rest of the data. In general, home builders are not very highly profit. They don't have much profit margin, but 8%, 9% is still a ton, and they do that total revenue aggregate when they sell a lot of homes at this profit margin. So, and let us take DR Horton. And you can go to summary page. These stocks, a lot of the stocks rated 10, and research team accumulate, Credit Suisse research outperform, street buy, CFRA buy. Okay, so as you can see here, so many buy ratings on DR Horton Homes, and then you know it's showing like a lot of positive momentum for this home building. So if I were you, I will look at home builder stocks seriously for next couple of days, next couple of quarters, and see if it's a good place for you to start investing into home builders.